Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of what is the average jail time for tax evasion and how does the IRS find you. Two of the most common questions. You do something wrong, your brain shoots to the position of, oh my God, I think I committed tax evasion, and dear Lord, how is the IRS going to find me, right? What makes tax evasion scarier than other types of infractions with the IRS is tax evasion is a crime. Since it's a crime, you may not only have to pay a huge monetary fine, you may also have a loss of freedom or incarceration. Average jail time for tax evasion is still 3 to 5 years. If you look up recent cases, generally somewhere between 30 and 50 months. It could be less than that, right? Maybe you get probation, or maybe you get 18 months, or it could be more than that, right? Maybe you have a very detailed sort of tax evasion that involves lots of moving parts, and you end up doing 7 to 10, right? So the idea is, since it's criminal, not only do you have monetary penalties, but you can also have a loss of freedom. For example, civil tax fraud is bad too, but there's no loss of freedom, 75% penalty tax, but you get to go sleep in your bed at night, right? Which is a good thing. How does the IRS find you, right? That's the first question. Well, generally it'll stem initially from an audit, right? Forgetting whistleblowers and the voluntary disclosure where a third party is being disclosed as well. Those are less common. In a common situation, it's an Eggshell audit or a reverse Eggshell audit. The reverse Eggshell audit and the Eggshell audit are very dangerous. With an Eggshell audit, the taxpayer is in an audit but has information that they don't want the IRS to know. Okay? And you can't intentionally omit information. You can't intentionally misrepresent information. So you, and hopefully you brought your attorney, try to dance around the issues with providing enough of a substantive response that you're not evading the questions. Reverse Eggshell audit's a lot worse in that situation. The IRS has already got the information. It's very common in the international tax offshore compliance field. Foreign bank under FATCA, the Foreign Account Tax Compliance Act, they may have reported your accounts. You never reported them on your FBAR, your 8938. IRS has that information. You're in an audit. They ask you questions, kind of gauge your response. If the IRS agent thinks something criminal happened, they can't pursue it because it's not a criminal investigation. So what they do is they stop the audit. You generally, because you're smarter than everyone, right? You think you fool the IRS agent, they have no idea, but what's actually happening behind the scenes is they're writing a statement, sending it over to the IRS special agents for them to determine whether they want to investigate it or not. If they do, and then they think it's criminal, then they'll refer it out for possible prosecution. The main takeaway from that summary is this: just because you think you did something wrong doesn't mean you committed tax evasion. There's various stages it has to go through for it to even snowball to get to the position where you may possibly be subject to criminal enforcement. Industries that are common for tax evasion, offshore, always, right? It's been like that forever, but ever since the IRS ramped up enforcement of the FBAR, which has been around for 50 years, but it's really taken center stage in the offshore world these days, as well as Form 8938, which is a newer form for FATCA. The IRS has really been enforcing that. They have new, Operation Hidden Treasure. Ooh, they're going to find they're going to uncover all the cryptocurrency that people aren't reporting. For offshore, they've got the J5, which is for fraud, evasion in general, but there's a bit of an emphasis on offshore cryptocurrency. Entertainers are always ripe for tax evasion. They make a lot of money. Same with doctors, right? Make a lot of money, pay a lot of tax. At the end of the day, after paying your managers and your agents and your lawyers and the government, you don't have much left, and sometimes it could lead them astray. The construction field is also very common, just because in construction, people working, paying under the table, people are working illegally, cash business, people don't report, and it just kind of walks down that line, turns over to a type of evasion. If you think you committed some sort of evasion, but you're not sure, you should speak with a specialist, get an idea. Maybe it's non-willful. If it's willful, you've got the voluntary disclosure program, VDP. If it's non-willful, you've got streamlined, you've got reasonable cause, and you've got delinquency procedures, depending on what type of situation you're in, what the facts are, where the money is. We have lots of free information available on our websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.